Hello and welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Hormis Patakia and Reema Tendulkar. Hey guys, good morning. Well, yesterday we saw those levels above 25,300. Today we are comfortably above 25,400. In fact, we are building onto those gains as we speak. So right now, 110-point uptick on the Nifty. All the major four indices, they are in the green. We have a good contribution coming in from the Nifty IT pack. The Fed rate cut and a lot that is happening globally is something which is putting focus on these names. So we do have some of these stocks in the Nifty pack which are at the day's high as we speak. Insurance stocks should come up for you on the screen. SBI Life at the day's high. We also have HDFC Life, which is doing well. Across the board, good gains coming in. Bank Nifty outperforming yet again. So we'll be watching out for what moves take place through the course of the trading session. But for now, maintaining the gains that we started with today.
Indeed, and it helps when the two twin engines, both IT and banks, are firing for the market. Just a quick word on IT since you brought it up. The Nifty IT index is one of the best performing sectors, up nearly 1%. Some of the reasons driving the optimism: one, the Fed rate cut is positive for the valuations of Indian IT companies. These are cash-rich companies. Now you're discounting them at a lower rate, and therefore the value goes up, the net present value. So that's reason number one. Secondly, because of lower interest rates, some of the sectors which require very high capex or which are indebted, for example, the telecom sector, they maybe can start spending because they will save more via interest expenses. Or even the mortgage sector can see a recovery. So that's a positive. So even sectorally, some of the sectors which were hurt could see a revival. Third reason is the dollar index. Well, yesterday rebounded, but the dollar index is still broadly 10% lower on a year-to-date basis. Recently, the Infosys buyback, the Infy buyback, has also raised expectation that others will follow suit. So both TCS and Wipro are eligible for the buyback. And then finally, the biggest reason is the underperformance. The Nifty IT index is down 15% on a year-to-date basis, while the Nifty is up close to about 7.5%, and it's still about 20% away from its 52-week high. So these are some reasons driving the gains in IT. But let's talk about stocks. Hormis is here to put the spotlight on it.
Lots of news flow driven names earlier in the morning, and look at the absolutely crazy volumes that you are seeing today. And SEPC is the first one, Shriram EPC, the one in order earlier in the day, 443 crore order. That is almost 20% of its overall market cap, that order win value. And today's volumes are already at a 2-month high in the first 2 hours of the trading session. Close to 4 crore shares have already changed hands, and in comparison to the 20-day average of just around 15 lakh shares. And now the stock is broken above its 100-day moving average at 1294, and now the next level on the upside is the 200-day moving average, which comes around close to 15 rupees. Now the other one on the list is high-tech pipes, and pipe stocks have been in the news over the last few trading sessions. And look at high-tech pipes here, 7th day of gains for the stock. It's up 32% in these last 7 sessions, and today's volumes have already crossed those of last Friday. Last Friday's volumes were on the higher side. We've already had close to 1.5 crore shares that have changed hands. The 20-day average is only 7 lakh shares. Now it is broken above its 200-day moving average of 111, post which it is now trading above all of its key moving averages. And since its migration to the main board in 2018, the stock has surged over 4x in value. The third one on the list today is Prism Johnson, and today's move is the biggest single-day gain since September of last year, is 11% higher on the stock. It's broken above its 50-day moving average as well, now above 151. Today's volumes again at a 2-month high already. Had close to 33 lakh shares that have already changed hands. And look at the 20-day average, only 34,000 shares. That's 34,000, by the way. And it's all because of this move, the stock is almost set to turn positive on a year-to-date basis as well, trimming its losses now down to just 2%. And last on the list, Poonawalla FinCorp, of course, can't not talk about it. The third straight day of gains for the stock, 13% higher today. And the volumes today are already the highest since October of last year and counting. We have had close to 3 crore shares of Poonawalla FinCorp that have already changed hands in the first couple of hours of today, and the 20-day average is only 2 lakh shares. And it is now the next level to watch is 520, which is the all-time high on the stock for Poonawalla FinCorp.
Okay, interesting names there. Thank you so much, Hormus, for bringing us all those movers. But let's bring you a corporate conversation. CNBC TV18's Parikshit Luthra spoke to Vivek Chand Sehgal, the chairman of Samvardhan Motherson Group, and began by asking him about the company's ambitious 5-year plan that the company released a few days back. Here's what he had to say.
India is going to fast propel into a 5 trillion economy, as the Prime Minister has laid out. The group per se is going to focus on the issues that are at hand. What all we need for our group to achieve its target. You see, in Motherson, every 5 years we come out with an audacious 5-year plan. And of course, everybody is very excited about it. People tell us that it's not possible, but we make it possible. I think every 5-year plan, right from 95, when we just listed our company, from $2.14 million as turnover, we've gone to now 25.7 billion. So I think the idea to dream, the eyes open, and then go for it. I think the levers are many. We have automotive by itself is going to be a big thing. People are wanting more and more alternatives. And I think one of the key things that we have announced this thing is that a lot of the car makers are asking us to set up manufacturing plants for them. But manufacture not in a sense of big numbers or something. These are niche areas where they want the car to be produced. And so why not? We can assemble machines, we can assemble the components, we can assemble a car, why not?
So when would you be looking at starting the assembly or manufacturing of cars?
The moment the customer gives us this thing, we'll go ahead.
So you're ready to start as soon as possible?
Yeah, whenever. Why should it take time?
Okay. Any announcement there which is on the horizon?
No.
Not immediately. How are you navigating these global headwinds? The US tariffs, 50%. There is, of course, trade negotiations going on with Europe as well. But how are the trade uncertainties impacting you?
So Motherson has been very focused that if we are exporting more than 10% of our turnover, then we will go into that country. We will stop the exports. We want to export, we want to make it in that country. So we're in 44 countries. We have more than 450 plants all over. So I don't need to export, otherwise I'll be taking all the export awards.
Right. You've often said that you prefer acquisitions than joint ventures because it gives you complete control on the technology and running the company. Could you give us a sense of the future acquisitions that you may be looking at? What sector or what aspect of the automotive or manufacturing industry would you like to focus on? Because today Motherson is not just into automotives, you're into aerospace, you're into semiconductors and other sectors as well.
I think, first of all, we are a not yet company. That means if you ask me, are you producing this? And if I'm not, I won't say no, I'll say not yet. Because some customer or somebody will ask me to produce it. So we're an open-minded company. We go for those particular challenges which the customer poses to us. I think it's very important to understand what does the customer need. And the customer decides and tells us, and we go for it. Same in acquisitions also. We have never got up in the morning and said, today I'll buy this guy and that. No, that's not us. We wait for the customers to tell us they want a particular thing to be made and to top quality. So we do that. So we've done 44 acquisitions up till date. And we think it's a better way than joint ventures because you own the technology, the patents and everything come to you. And the first thing we do is to bring one part of that company into India so that we can have a global offering to all our customers over there.
Vivek Chand Sehgal in an exclusive interaction there with CNBC TV18. Take a short break. On the other side, we put the spotlight on the crypto market with Archit Mittal from Smartwave Academy. On the other side with Manisha Gupta.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
On Crypto Corner today, we are joined by Archit Mittal, who is the founder of SmartWave Academy. Archit, hi, thank you so much for joining in. You work in cryptos for a very long time now. You have been responsible for teaching, training people to responsibly invest in cryptos. What really has been the feedback? Do people in India now understand when it comes to crypto in sense of investing?
So thank you, Manisha ji, for letting me answer this. So basically, the response is very good. For the last 3 to 4 months, we have seen a tremendous response for this asset class, and people are adopting it at a very high pace. Like last year also, crypto has shown some boom, but this year the boom, along with the interest of the people, is really taking the market forward. We are seeing a lot of volume surges across the exchanges as well.
Oh, well, absolutely. Archit, when we look at the last week itself, in sense of, in sense of volumes, whether it has been about ETFs or overall volumes or even inflows has been near record highs there. But this is more to do with the international markets and overall volumes. When it comes to India and when we talk about responsible investing, I mean, I'm assuming that is a discipline that you have to have in various asset classes. But when it comes to cryptos, what is that additional care that one needs to take?
So as we know that the crypto markets are much more volatile than any traditional markets across the globe. So that's why this term responsible investing has to be kept in mind every time when the person is trying to get into the crypto markets. The markets are a bit volatile. If I talk about Bitcoin as well as Ethereum, the average volatility is almost around 20 to 25%. That if the coin is going up to $1 lakh also, if I am talking about Bitcoin, it can show a deep dive till $75,000 also. That's a massive capital erosion for the people, for the investors which are out there. But when we are talking about cryptos, all these giant coins are now behaving a bit maturely, and as the markets are maturing, we are seeing that the top coins are showing a bit less volatility compared to the altcoins which are there in the market. So yes, when we talk about responsible investing, we should go and further our investments towards the top 5 and top 10 coins which are there in the markets.
Oh, well, absolutely, Archit. That really was my next question, because there are some 25,000 cryptos there. Some have been around for all that time. Some really haven't been. We hear enough about frauds and rug pulls and etc. So what is your sense when there is a new person, a beginner looking to invest in cryptos? What should they be looking at in sense of investment?
So basically, if a beginner is trying to invest in cryptos, there should be 2 levels of investments which he should look for. First, investments in the top coins, the safe havens, or basically what we call as the blue chips of the crypto markets. That is the top 5 coins: Bitcoin, Ethereum, Solana, XRP, or BNB coins. These are the top 5 coins, and this list can extend up to the top 10 coins. But when we are talking about the altcoins, apart from the top coins, which have the decent volumes in nature, then the person should shift towards the researching part and should read about the white paper and what the crypto is actually doing behind the scenes. So that is a major important rule for the investment purposes for the altcoins. But for the top 5 or top 10 coins, the people can go ahead and allocate some of the percentage of the capital towards this thing as an SIP or a directly investment format.
Archit, also, since you work with a lot of people who want to invest in cryptos, what really is your sense on what geographies are they coming in from? What is the age group that seems to be picking up now?
So basically, if I'm talking about the global markets, the major volume drawn is from the US markets only, the US clients. There are a couple of US clients with me as well. But apart from that, in India, the major segment which is targeting is the first job goers and the early 20 people, because they want that sense of freedom also in their investment. They want a market which they can look for and actively participate in. So that is not a choice in various other markets, because all the markets are time constrained. This is one of the rare markets which is 24/7. There is no time constraint. So we are seeing a lot of interest from the early movers who are starting their investment journeys, who want to actively participate in this markets.
Archit, also, what should really be your portfolio in sense of percentage when you're looking at crypto?
So anywhere around 5 to 10% as of now, that is a good portfolio mix-up and a good portfolio diversification for people. You can enjoy the returns of cryptos also without getting into that much of risk which is associated with the volatility of crypto.
Archit, as you said, the last 3 or 4 months have seen an increase in participation and more people eyeing up, lining in to buy cryptos with the kind of returns that it has given. Is it about more awareness? Is it about a class which is giving great returns? Are people also venturing into futures and options now? Or is it more about investing?
So basically, like returns are great because it's a new asset class. It's picking up the pace. So we are seeing a bit better benchmark updates which are there. There is a bull run also. That's why the returns are a bit on a higher side. But on an average, on a longer frame of time, we will be seeing the average returns which we are seeing in the other markets. But it's more about the freedom which the people are getting in terms of investment, in terms of the market participation, which is a 24/7 markets. So that is a main agenda which I see in the participants, that they want more freedom around it. They want to participate in an asset class where globally all the people are participating. So in that way, it is picking up much more boom.
Archit, markets continue to react to what's really happening in US because we're looking at more legislations, more friendlier tones coming in from there. And then the street is also reacting to the macro, the 25 basis point rate cut from the US Fed. So when it comes to crypto, whether it's about strong legislations, friendly moves in various countries, and then the macro as well, what is your sense from here on? Because we've done halving the last year as well. So when it comes to 2025, even 26 for that matter, what is it that you will keep an eye on?
So definitely, there are a lot of tailwinds for the crypto markets. We are getting like US strategy reserves are created. Fed rate is there. So Fed rate also has impacted positive. Like yesterday was the Fed rate, and today we have seen a positive uptick in all the major coins as well as in the altcoins as well. And apart from that, in the industry overall, there is a lot of support globally which we are seeing for this market. So yes, definitely 2025 and 2026 is going to be very great years for crypto markets. It's kind of a bull run. And in October, November, December, hopefully, as per the recent year data also, we are seeing a very positive month going forward in October, November, December this year also.
All right. So Q4 usually is good for cryptos, and this year is going to be no different. Archit, as always, thank you so much for joining in. And with that, we slip into a short break. More news and updates continue on the other side.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. 100 points higher on the Nifty. We mentioned in the morning that 25,350 and thereabouts will bring the index towards 25,500. We are moving towards that level, and the Nifty Bank as well, the second of the two levels that we have highlighted, 55,700 on the upside. Both of them now trading above those levels, and good going for both the Nifty and the Nifty Bank, powering along in today's session as well. So a good time to get in what the FNO data is indicating. Mangalam is at the FNO desk to tell us just that. Mangalam.
Well, the FNO data is indicating no different from what it was in the earlier few sessions as well. That the index is gradually moving higher, going towards important levels, and at the same time there is gradual short covering that takes place as well as the index continues to sustain at higher levels. So today we have the Nifty doing well. The broader markets are doing a shade better in terms of the market breadth, and it has been led by two engines, the frontline index, that is the Nifty Bank and the Nifty IT. And in doing so, the Nifty Bank, once it crossed the 20-day moving average, something that we had pointed out last week as well, it had a clear runway for a 1,000-point rally because we had the 50 and the 100-day moving average, and today it's gone ahead and crossed that also. So the Nifty has put up nearly 1,000 points from the lows. The Nifty Bank too has seen a near 1,200, 1,300-point rally on that index. The IT index, that too has been doing very well, and in today's trading session as well. However, there's a bit of a congestion that it's facing around the 100-day moving average. It crossed past the 100-day moving average today. 36,804 is where the 100-day moving average is placed. It went to over 37,000, but now is just slightly below the 100-day moving average. So we'll watch out for how the Nifty IT index, or whether it recovers in the second half or not. The only fly in the ointment that I'm looking at right now is the India VIX. As the index is gradually moving higher, the India VIX is now nearing complacency levels. It's sub 10, so that's something we'll watch out for. After a 1,000-point rally on the index, can we see some consolidation? The India VIX move higher as well, and some put writers also becoming a little more moderate is something I will watch out for, because despite the up move that we're seeing today, we're seeing call writers active at 25,500 and put writers active at 25,400. So the support of the Nifty has moved higher, and call writers believe that maybe closer to 25,550 to 25,600 is where some supply will come in. And in doing so, the put call ratio has moved higher from overbought levels of 1.22 to about 1.24. So the India VIX spiking and the India PCR, the Nifty PCR coming down, would be two important parameters to track whether the up move sustains or not. But a lot of individual stocks are fairly well bid today. We have KFIN, which has seen a lot of long positions being added. We've seen the KPIT tech stock fairly well bid as well. Mid-cap IT continues to do well, even as the large-cap IT index has seen a bit of moderation from the highs. And IREDA, that's the other stock, which is up 2%, with a lot of open interest backing it on the long side.
Thank you very much for that. Get into a break. On the other side, we'll discuss the market fundamentals. Mangalam was just telling us about this 1,000-point rally that we've seen. In fact, brokerages are turning more bullish. PL Capital is incrementally more constructive on the market. Risk rewards turn favorable. And now their portfolio has shifted from defensive to a moderately aggressive one. So we'll discuss all this with Siddharth Vora from PL Asset Management on the other side. Welcome back. The Nifty is at 25,450 on the gainers list today. You've got HDFC Life right on top with the up move today. It's crossed the 50-day moving average. Infosys is seeing some buying. Infosys at 1545. The buyback price will be 1800, though the dates so far have not been announced. Eternal is seeing some interest. We should pull up Urban Company as well. After a 60% up move, it opened up with a gain of 1.5%. But let's see whether the interest and excitement continues in Urban Company, because market capitalization has crossed the 25,000 crore mark and indeed still holding up with a gain of 1.5%. HUL, HDFC Bank, which underperformed the rest of the private sector banks yesterday, is up nearly 1%. So that's doing well and that's powering the banking sector. But as promised, let's talk about under the lens. And the stock on Sonal's radar today is Platinum Industries. Sona, take it away.
Thank you so much for that. Well, under the lens today is Platinum Industries, and the stock was on the move yesterday, gained around 11%. The company is in the business of CPVC, PVC additives and lubricants as well, and it caters to a whole host of sectors from agriculture to construction, healthcare and even automobiles. Platinum hit the markets in March last year. The price was 225 rupees, which was a premium of 32% to its issue price. Since then, the stock has held strong and now trading about 40% higher than listing levels. At IPO, we did see big ticket anchor investors like Baring PE, AIF, Elara India Opportunities Fund, Sane Capital and Antara Evergreen back the company as well. But now, today, only we have one of them, that is Baring, remains as a major shareholder in the company at 2.7%. Let's check the financials now. Revenues, they have grown consistently from 188 crores in FY22 to nearly 392 crores in FY25. In Q1, we saw revenues of 115 crore rupees. EBITDA too has climbed to 58 crore rupees in FY25, more than double of the FY22 levels at 25 crore rupees. If we talk about profits, they have expanded from 18 crores in FY22 to around 50 crore rupees in FY25, and on Q1, 13 crore rupees as of now. Now remember, the company already holds a 13% share in the domestic PVC additives market, and about 10% of the sales come from exports, which has Europe, the Middle East, Africa and Asia. But export expansion is in focus. The company has set up a 60,000-ton facility near the Suez Canal in Egypt to cater to some markets like Latin America and the other regions as well. Alongside its 1.2 lakh ton capacity at Palghar is something that the company is focusing on as well. Now let's talk about balance sheet. Cash from operations slipped to negative 8 crore rupees, and working capital days have stretched to 62 in Q1 versus 51 in FY25. The collection period has gone higher as well to 70 days in Q1 versus 66 days that we saw in FY25. On shareholding, promoters remain firmly in control with 71%. FIIs, however, have sharply cut down their exposure from over 5% last year to just about 0.5% now. DIRs are steady at around 2.8%. That figure will come up for you on the screen as well. But Platinum says it is banking on its enhanced capacity and new geographies to cement market leadership in PVC stabilizers. If you talk about the valuations, the stock trades at 38.67 times based on FY25 earnings, not too cheap, but mostly on the expensive side. And the return on equity is at 14%. Return on capital employed has come in at 18% in FY25, which is slightly lower than the previous year.
Interesting. Platinum Industries, the stock under the lens of Sonal. Keep that on your radar as well. Let's bring in Siddharth Vora now from PL Asset Management, joining in now to take the conversation forward. Siddharth, good morning. Thank you for joining in. You mentioned that your stance now has turned more constructive and your portfolio shift has now moved from a defensive to a moderately aggressive stance. If you could explain that rationale to us first, and then we move on to your sectoral ideas as well.
Sure. So, after a very long time, we've turned bullish on the short-term, medium, and long-term prospects in India. And of course, multiple drivers behind this change in stance. From the overall macro setup for India to the micro setup for India and global cues, I think after a very long time, things are converging for the better. Everybody's already aware that tax cuts, GST reforms, lower interest rates, strong GDP growth, low inflation, banking liquidity within India, all of these are going to definitely create the demand drivers that are needed for the next leg of growth. Also, we believe that the whole earnings downgrade cycle in India has peaked out and now we're entering an upgrade cycle. Factor spreads, quantitative factor spreads were at multi-year lows, close to zero. They are now starting to reverse, which is a great sign for markets to do well, factor strategies to do well. Furthermore, if you look at India's overall trade positioning also, globally, our equation with EU, Japan, UK, China, Russia, and now finally US is also, heading in the right direction. While all of this is happening, valuations remain neutral. They are not extremely expensive. The U-turn of FIIs is critical at this point. Low DXY and rate cuts in the US will obviously fuel a rally in India, and India's relative underperformance versus other emerging market peers will ensure that we have enough room for outperformance in the next 12 months. So overall, I think reducing uncertainty, improving risk appetite, improving sentiment and breadth, and neutral valuations.
Okay. So Siddharth, you've said that you've deployed roughly 15% cash in the recent weeks. What's the cash that's left on your books now? When will you turn more aggressive on the market? And where have you deployed, this 15% cash recently?
We've deployed all the cash, actually.
All the cash, okay.
Yeah, we don't have any cash anymore to deploy. Now, any more cash that comes might come from, any rebalance or rotation if we exit a couple of stocks, enter some new stocks. And we've deployed mainly in our existing holdings. We've increased allocation to industrials. We've increased allocation to financials. We've increased some allocation to materials as well, like metals mainly.
Okay. You're talking about where you have increased exposure. Some of them are existing holdings for you. But you've trimmed exposure to private banks. What explains that? Do you prefer PSU banks over private banks? What's the catch here?
So we exited private banks 2 months back, 2.5 months back, actually. We were holding them from Jan all the way up to 2 months back. And then we've moved into NBFCs and asset management companies, and now we've scaled up our allocations there. We believe that we're entering a higher beta phase of the market with improved risk appetite, and private banks were in our portfolio mainly as a defensive, low volatility, high quality bet on the financials. Now, as we come out of the low volatility and high quality regime, increase the beta, increase the risk, I think NBFCs, asset management companies, likely to do a little better.
What about capital market names, Siddharth? Where does your preference lie? Be it the exchanges like the BSE or the discount brokers like Angel and the likes, or even the wealth managers?
So we are currently positioned within asset management companies. I think three of them, asset management companies, an exchange as well. Broadly, these are the names, yeah.
No platform companies? So much interest. Urban Company had a fabulous day one. Eternal Swiggy continues to do well. Are they a part of your portfolio?
Unfortunately not.
No, okay.
Okay, all right. Thank you so much for joining in today and giving us your sense of the market moves going forward. The fact that you've turned constructive as well and have deployed the remaining cash in the portfolio as well. Time for a short break now. Management of InterArc Building Solutions will join us next to discuss their FY26 outlook and a lot more. Welcome back. You're still tuned into Trading Hour. Interarc Building Solutions is the next company on our radar. Arvind Nanda, who is the MD at the company, joins us now to discuss a lot of points. The first is the fresh capex and capacity expansion plans, the outcome of income tax searches as well, and their growth guidance. Mr. Nanda, good morning. Thank you so much for joining in. Let's talk about the fresh capex that you have in place. What is the amount that you're planning here? What is the current capacity? And how much will it increase by with this new capex that you have undertaken? And what is the revenue potential from this particular fund?
Thank you for having me on the show. Yes, we had started these facilities last year, started the work, and now they are into full commercial production. So one is, of course, Andhra Pradesh, which is the final phase, and now it's a fully integrated plant. So that will be our fourth fully integrated plant in India. Fully integrated plant is approximately 40,000 tons of buildings and about 500 crores of building sale in value, approximately at today's values. So with these four integrated plants, we have a capacity now of about 2,000 crores plus to deliver buildings in. And the additional line in Kitcha serves a dual purpose. It is a new form of welding line which makes box lines, which is box columns. Box columns are very popular in coming all these new age industries kind of buildings. Box columns are very popular because they don't have any edges or any grooves which can spoil the inside, the level of cleanliness they want. So box column line was very essential because currently we do box columns either on our normal welding line or we buy them from outside, both being very, very unproductive for us. So box line will be very, very useful. It will also add some capacity. I think a couple of 100 crores worth of capacity will be added. So for the current year, we already have enough capacity to deliver what we have to deliver. But this will help us try to complete our order book faster. Like I mentioned before also, in many ways, our order book reflects what we can deliver in the next 10 to 11 months. We can't really go longer than that. So I think putting up these facilities, having them in full play now will help. Going forward also, like we mentioned, we are starting two new facilities, one in Gujarat, which will be again in two phases, one coming up maybe about 10 to 11 months from today, and the second phase by the end of next year, end of next calendar year. So that will be a fully integrated plant by end of next year. And a heavy structure plant in Andhra, next to where we are, will also add to our capacity, but in a different kind of an item. Just like box line, heavy structure is also a different item, but of course contributes to the sales because the sale is the total building. That is our current plan for capacity expansion and what is the current capacity now.
Mr. Nanda, if I may just request you for some numbers then. What is the total capex outlay? What would it take your capacity to, say, by the end of 2 years, once all of it comes under stream? And what is the revenue potential of that? Some numbers would help, sir.
So we are planning a capacity to be able to deliver about 2,500 crores of buildings by 27-28. So we are hoping that by the end of 26 calendar year, we should have this capacity in place. Currently, it's about 2,000 crores. We have spent approximately 50-55 crores on fully integrating the Andhra Pradesh plant and the new Kitcha line. And we will spend another 150 to 160 crores in the two new lines we are planning in the next 18 months. So plan is that 27-28, we should have minimum of 2,500 crores worth of capacity or approximately 220,000, 230,000 tons of buildings to be delivered. That is the plan.
Mr. Nanda, thank you for joining in. Before we get back to business, it's just clearing the air on the IT search operations which you had highlighted on the 18th that took place at some of your offices and factory premises and were completed on the 22nd. If you could elaborate a little more as to what exactly happened, and after the completion, have you heard anything from the IT department?
Well, IT department came and I think they were here for 4 days. They interviewed a lot of our people and went through all our records, everything. But I don't think there's anything to worry about for Interarc in this whole matter. We've always complied with all the laws, all the rules. There is nothing to worry about. They had their own reasons, I guess, that we cannot question. but we are fully cooperating with them, and I think they have found us very cooperative. They have, in fact, being very, very cooperative, and we are also being very cooperative. But the whole process takes about 30 days. So I think today or tomorrow, the process of some people's lockers, our own records, they need time to go through all of them even after they leave. So I think from October onwards, we will start hearing a little bit more. But like I said, Interact has nothing to worry.
Oh, okay, all right. Looks like we lost that line, but that is the word coming in from Interact Building Solutions, looking at capex and a lot more updates in terms of expansion as well. The stock is up 2% as we speak. Time for a short break now. On the other side, we bring you our big story of the day. Stay tuned for that.
Welcome back. Let's talk about the big story then of the day. It's Cohance Life Sciences. For one, there was a large block in the counter, and two, there were also some US FDA observations. So first, let's just get to the news, and then we'll take the conversation forward with Ekta. But Vivek, tell us first the updates on Cohance.
Well, that's right. Cohance Life Sciences, the merged entity of Suven as well as Cohance, which is now controlled by private equity major Advent, last evening launched a block deal. So Advent launched a block deal, and last evening we understood that they were looking to sell close to 5.1% stake. But today morning they went ahead and upsized the block deal offering. So close to 9% of total equity that they held is something that they looked to offload today via the block deal. That particular deal did go through, and now what we understand is that there is a lockup of a further 210 days as far as the selling shareholder is concerned. So the total size of the block that happened today was close to $350 million at the floor price of close to 900 rupees a share. Now, other than that, remember, in August, there was an inspection as far as the company's Telangana facility was concerned, and the company told the exchanges that they had received 6 observations in the Form 483. We managed to access the Form 483 today. 6 observations are largely routine in nature. Doesn't appear as though there are any data integrity issues. So the first one is failure to review data discrepancies. Number 2, written drug record complaints were not followed up. Quality control unit procedures were not followed. The fourth one states that the equipment and utensils were not maintained well. And lastly, test method accuracies were something that were not established. On the back of that, you can see the stock down almost 6% today.
6% lower for Cohance. But, to put this into perspective and on for a broader perspective as well, this was about Cohance, but Ekta is here to tell us about the key drivers for the CDMO industry. There's a lot of conversations happening in the recent times, Ekta.
Well, yes, absolutely. So the CDMO industry, just want to put it into perspective that innovators are now looking for a dependent CDMO partner to build supply security when it comes to their entire supply chain. So innovator companies are looking to do that, global innovator companies. Now, to explain to you that the ADCDRMO market, which is basically the ADC market, is basically the antibody drug conjugate market, which is a type of cancer therapy. Now, that is valued at $1.4 billion currently and is estimated to grow up to $4 billion by 2029. So that entire supply chain needs CDMO participation, and hence companies such as, say, for example, Cohance, Piramal Pharma, all of these CDMO companies are expected to be beneficiaries when they participate in this ADC opportunity. Now, China +1 as well as EU +1 are expected to be key drivers when it comes to CDMO growth going forward. Also, the US Biosecure Act has come under discussion again, and it could be an opportunity for Indian CDMO companies when innovator companies try to sort of move away from China in terms of their key supplier because of the US Biosecure Act. Remember that China +1 is already taking place, but once the US Biosecure Act, if it does come into action, then that could be an additional incentive for global innovator companies to basically secure themselves in other locations such as India.
But Ekta, tell me, finally, how does it impact Cohance specifically from this opportunity, the CDMO opportunity?
Okay, so I'll just tell you a little bit about Cohance. It's basically a contract developer and manufacturer, basically a CDMO company. It was formerly known as Suven Pharma. Remember that Advent bought around 50% stake in Suven in September 2023 for around 6,300 crores. It's rebranded as Cohance since May 2025. And Cohance is basically formed via an amalgamation of several entities, including Suven Pharma, ZCL Chemicals, Avra Labs. There are a couple of acquisitions such as Sapala Organics, etc. Now, Cohance has said that they've responded to a healthy set of requests for proposals in the quarter gone by when it comes to innovator companies responding to them. They're seeing RFPs from established customers. Global innovators are basically responding to the company's capabilities when it comes to antibody drug conjugates or ADCs, something that I just explained earlier, can be a $4 billion opportunity eventually. It's showing up in the numbers slowly. So Q1 FY26 revenue was up 12.5%, margins 20.4%, profit of 46.4%. On an adjusted basis, the pharma CDMO segment was up 30%. Now, they do have, for example, 2 products from the small molecule portfolio which could transition to commercial stage. They've secured a life cycle management supply mandate from an innovator company for a branded API product, and NJ Bio, their arm in the US, has received a new order from existing customers to supply ADCs. So basically, they also have a $1 billion target by 2030. So that is something that the street is looking for in terms of something that they could achieve.
Ekta, thank you very much for that. That brings, and Vivek, for joining in. That brings us to a close in Trading Hour. Thank you for watching.